I just did a video on PetMed Express. There's only 5 companies in the same industry as pets. Let me pull up the Excel file. Yeah, somebody mentioned PetMed Express the other day, so I decided to do a video. It's really come down a lot. So at what point is it a good buy? But on a short-term basis, you can make money in any stock. Even the worst companies in the world, you can make money on. It doesn't always have to be great companies. The thing is, when you swing trade, you tend to put a lot of money after like an investment, and oftentimes you'll get like maybe a quick 10-20% return. You generally don't sit and wait years and years for a stock to go up like 10, 20, 30x. So the problem is, if you're like always throwing stock, and like a good result is the stock was up 50%, say, over a week or two. So you could turn that 10 to 15. And if you do that a bunch of times, you turn your 10 into like 12, 13, 11. The problem is, a couple of times you do it and the stock goes down a lot, like 80%, then you wipe out a lot of your gains. And also, if you use a strategy where say you do start with 10,000, and after maybe say a year you grow it to 80,000, and if you put like all 80 or even like 60,000 into a stock that you think is a really good, like you're really positive about a certain trade, so you're like, okay, I'm going to put 60 into it instead of my usual 10, and then it just gets slammed at 60. Like, it's just so hard to recover. So if you spent a year growing 10 to 80, and within a month it went from 80 to 20, you're probably not going to make the best decisions, because you're going to try to get back to where you were at 80. So you're going to be putting a lot more money on the line. So that's why it's hard to do those things. I don't really know anybody who's made a lot of money short term. And all the people that made money, remember that there's a guy, and he said, I held it. So it ended up, he lost most of it. Like, he put like 50,000 in it. And it's always easy to say after the fact, like, well, you hit $1 million, you should have just sold it. It's not like you could retire on $1 million. So at what point do you just sell and never invest again, or only invest in like really safe investments? Gold ETFs. Well, that's good. If you've been buying gold ETFs, you're probably doing pretty well, because gold is up. It's like the only thing that's been going up lately. It's trading at an all-time high, gold. Look at the ticker GLD is over 300. I think that's the first time it's gotten over 300. So you can see from 2011 to 2022, it pretty much didn't move because the market did well. So now that the market seems to be struggling, people are putting their money into gold at a safe haven. But it's not going to last forever. I mean, before you know it, I could see it coming right back down to like 200. Yeah, but PET is really, it's been trading a long time. 97, it looks like it started trading. And it had a pretty good ride up to 2018. That was its peak. It hit about $50 in 2018. And then before COVID, it started really coming down. So in 2019, so it had nothing to do with COVID. But once the COVID crash happened, pretty much all stocks were getting bought. Everybody was buying stocks because it was a discount. So it did drive it back up to almost 40 again. And that was in mid 2020. But ever since then, it's just pretty much getting lower and lower. It's not at its all-time low. What's it at now? It's at 309. But I mean, it was trading higher in 1998. 1 year after IPO, it was trading higher than $3. So it's gotten beat up pretty bad. And I think it's really hard to say if this is going to come back. I think there's a chance it'll come back. But the revenue just keeps going down. I'll show you so here's their revenue since 2014, 230 million in 2014, and it had a steady climb to a little over 300 million. The peak was 312 million in 2020. That's for all of 2020. And then it came down for 2-3 straight years, and did come up a little bit in the as of March 2024, it was 280 million, but then it's back down. It's the trailing 12 months, I guess for calendar year 2024, it's 247 million, which is pretty close to its revenue back in 2014, a little higher than 2014. So it's back to 2017 revenue numbers. The thing is, it's profitable business. So they pretty much, gold seems super overbought. Yeah, it definitely seems overbought. And I could see it going up more. But there's going to be a pullback. I mean, gold is not like a company where it just can go up forever. Companies can go up forever. Like, especially if the company's profitable. Like, you can see Apple overall just goes up. You know, there's always going to be pullbacks, things like that. But overall, it's been going up. Lots of companies, if you look at their stock overall, it just pretty much goes up. But gold, it can't. A commodity can't go up forever. There's going to be like supply and demand issues. I mean, it will move with inflation. You can see it was pretty low in 2004. It's not much of a time frame. It's only 20 years. It would be good to see if on a longer term basis, like oil would probably be a good one. Price of gold historically, it pretty much is going to move with inflation overall, over like, you know, a 10, 20, 30 year time frame. And the longer the time frame, it's definitely going to move with inflation. Let's see. So here's the price of gold. So let's give us a little more time. So 615, 1915. And then the Great Depression, was that 1923? When was the Great Depression? 1929. It was long, 29 to 41. So then it came down to 320. It came way up. 1934 was the peak because people were putting money into gold. That was a safe place to store money. Even the US dollar wasn't safe during the Great Depression. So it got 841 in 1934, and then it came down to its lowest level ever in 1971 to 303. Now it's higher than ever. It was 2,700 in 1980, and it didn't beat that level. It took over 40 years to beat 1980. So from 1980 to 2024, it just came down, then back up, which is what you're going to see with a commodity. It's not going to be a horizontal line. Because it came all the way down right before the dot-com crash. And when the dot-com crash happened, then people started buying gold. Because for a long time, people were putting their money into stocks. Why put money into gold when stocks are providing such good returns? And it can't go up forever, of course. So it did have a big run up from 2001 to 2011. It didn't beat its 1980 levels, but it came up over 2000. And then it's been since 2011, so over 14 years, it's been trading pretty much flat, down and up, down and up. And now it's reaching its all-time high. Did it hit 3,000? I guess it did hit 3,000 because so 3,300. So it did officially break the 3,000 barrier. That was in February. In February and March, it did break through 3,000. Daryl, what's up? Scott, recently I bought Saya and Atmu. What do you think about those? Thank you. And keep up. Oh, Sola. Does that say Sola? Or... It's hard to see. The screen's small. Sala? I don't even know those. But as it gets higher and higher, people just won't buy it. I mean, and it's not just people won't buy it, people will start selling it, especially if you bought it at a lower level. You might be up like a lot, 200%. So it's just smart business to sell it. Because if you got it under 2,000, even just 2 years ago, you're up 50% already. So it'd be a good. I did pick it up. I remember in right when COVID crashed. Silver, I almost 100% return. Gold, it wasn't as much. It was only 40, 50%. I don't know when I bought it. I think I bought it, but I know it made good return. So I thought I held it for a year. Silver. Silver is definitely more volatile. So silver was 16 in 1915. And then it took about 50, 60 years to break that level. like gold, its peak, which is crazy to see, but silver hit 146 in 1980. That's just crazy. It almost fell to zero in 1931 at the peak of the Great Recession. And then it really bottomed out during the dot-com crash. You'll see, which makes sense. Silver and gold will move opposite the market. So as the market increases, silver and gold decrease, and as the market goes down. Happy Easter is going up now. So, but that's kind of interesting. The silver is not really up that much. So far in 2025, silver is not up much at all. Maybe 10%. It was 29. In January, it was 32. And now it's 30, still 32. So it really didn't go up much at all, which is really interesting. That's interesting. Ray Dalio put a lot of money into silver. Because when a commodity goes up, or when anything goes up, a stock, people just think it's going to go up forever. And when something goes down, they think it's going to go down forever. Because when you look back, it's obvious nothing goes up forever or down forever. There's, certain things will go up overall, but it's not a straight line. But when you're living it day in, day out, and all you hear on the news is like, oh my God, gold is the most important thing. And well, because people jump on the bandwagon. It was the same thing with the dot-com crash. That's all you heard was these hedge funds and these gurus saying you have to be in a dot-com. If you're not, you're just throwing money away. And Buffett didn't invest in dot-coms, and he did well. He did well during those crashes. I was just out of college. The dot-com crash. I didn't really have any money like to invest. I mean, I had money to live and a little extra, but it wasn't until I was literally early 30s that I actually had money to invest. I was putting money into my 401k, of whatever it was, 5-10% of my paycheck, but there wasn't anything left over. Now, of course, I have more money to invest. So if I see opportunities, but it's cumulative. People think, and I thought same thing. People think, how am I going to ever have $100,000 to invest? I don't even have 10,000. I remember when I was talking to my friend, she had 30,000 in the bank. And I thought that was, and I wasn't like that young. I wasn't like a kid. I was in my early 20s. And I thought that was crazy. Like, how do you get $30,000? But she didn't go to college. So she was working. While I was in college, she was working and she lived at home. But everything's relative. Now if somebody says I have $100,000 to invest, I don't think that's a lot. But it's all relative. Like, because at the time, to me, like $30,000 seemed like a lot of money to have. I didn't know about that Ray Dalio. That's really interesting. Ray Dalio. Well, he probably bought gold companies. He's not like us just investing. He probably actually bought companies. But if you wait long enough, a commodity has to regress in price. But you can't wait. If you wait long enough for a company, it doesn't have to regress. Maybe at some point, but if you look at a good company, if you wait more than a year or two, you're probably not gonna get a good deal. Like a good company like Apple, Amazon, those types of companies, they just pretty much go up overall. You can't just if you wait for an entry point. I'm not saying it's not going to happen. Of course it can, but you just got to get in at some point. Even sometimes buying a stock at its all-time high, it's not like it could work out really well. Because imagine buying in 2014 Amazon at its all-time high. It was already up like 5,000%. If you got it at 20, even if you got it at 100 in 2018, which at the time it seemed high, and then it's September 2018, you pick up for 100, and then 2 years later, it just comes down and up. So after 2 years, you have nothing to show for it, and then it doubles. So you're up 100%. Then the dot-com crash, and you're down on your investment. And then you're like, what the hell? I waited from 2018. Well, it bottomed out in 2022. Yeah, I remember that with Amazon. So after 4 years, at one point you're up 100%. Now you're down on your investment. So you're like, why did I invest in 2018? What a waste. But with good stocks, they just go up overall. Although Amazon has come down a lot from the peak, which sucks. It was 240. Because I picked up a lot of Amazon. How much did I pick it up at? I'm not up that much. I picked up at 112 in 2020. I in my investments, in my portfolio, in 2017 I sold out of everything and I bought 4 stocks, and I haven't sold those 4. I've added some stuff, but and my wife's right in May 2020, I sold out of everything and then picked up a few stocks, and I just been riding those stocks. So it's about 5 years now. So I picked up Amazon at 112, almost exactly 5 years ago. So right here, 5 years ago. And I was up 50% initially, so that was good. And then by January 2023, I'm down like 25%. And I was up over 100% in the beginning of this year. Now it's regressing, but I just got to hold it out. I got to wait. Sure, these tariffs are going to hit Amazon. I don't think it'll hit Amazon that bad. I don't see why Amazon will get hit. They don't make anything. Companies like Apple, companies that make things like physical products, companies that make cars, tariffs will affect them a lot because a lot of the parts is imported. Amazon is an e-commerce business, so people sell things online, and there's really no tariffs because generally, if you buy things online, you're not a company. You're not paying tariffs. And they also do cloud computing. That's a big part of their business. Cloud computing. Amazon makes it. I mean, I'm sure they make some stuff. But what do they make? Amazon. They have the cloud computing business, which is like 25% of their business. But that's that I don't consider that make what does Amazon manufacture? Um, Amazon products include books, music, CDs. Well, that's stuff on their e-commerce platform. That's not, they don't actually make these things. Okay, Amazon product lines. But even if something comes from China, if you buy something on a website that's made in China, why would there be tariffs on that? I mean, if I had a business in the United States, say I made furniture, and like some of the bolts and screws I import from China uh, because they're a lot cheaper. Maybe I buy the wood locally. So yeah, I'm gonna pay tariffs on that. But if I'm just a person who buys things online, if it's made in China and I order it from China, I don't think there's going to be a tariff on that. Effect. Everybody's gonna get affected with tariffs. I get that. I'm not saying because indirectly, we all get affected by tariffs because most of us aren't manufacturing companies. Like we don't manufacture things in the United States, but we buy things that are made from. So indirectly, we're gonna get hit with tariffs because a lot of stuff we buy, or even if a company doesn't import that much from China, they're still probably going to have to pay more money for stuff because maybe the companies they're buying from import from China. Do tariffs affect? If small businesses increase prices because of tariffs, consumers are likely to buy fewer products online. And because these companies get most of their revenue from fees for processing merchant sales. But if I buy something from a Chinese company, which we do all the time, if we go to Amazon or Alibaba or eBay, um, I mean, that's not going to affect me for tariff purposes. As a consumer, you don't pay tariffs as a consumer because you're not importing. I mean, they are shipping something from China to the U.S., but it's not like recognized as import tariff. Um, can do Well, let's look at eBay. Do tariffs affect eBay? Because eBay is just a pure play e-commerce company. They don't make things like they don't have a cloud computing arm. Like Amazon has a lot. They're not just. I mean, they own Whole Foods. That Whole Foods will get affected by tariffs. I'm assuming they must import some stuff from China. Okay, here we go. Steps to date with tariffs and customs. We want to keep you informed how we're supporting our customers. New use customs. Okay, so if you sell stuff on eBay, this is for if you sell stuff. So U.S. customers who import goods over $800 from other countries may need to pay tariffs and fees. So if you bought like a toaster oven for $150 from a Chinese company, that's not tariffs. Now, if you if you sell toaster ovens on eBay, right, and you buy like $5,000 of toaster ovens every year from this company in China, yes, you will pay tariffs. And it looks like if you do buy something that's over $800, you might have to pay tariffs on that. But I'm not sure if that. I think this is for people who buy things and then sell them. Who I don't think this is for people who buy things as a consumer. I'm pretty sure. eBay could do well as a second. Exactly. eBay, that's a good point. eBay may be a good alternative to Amazon, and we could see eBay go up in price. Tariffs, which vary by country, are usually calculated as a percentage of the shipment's price. Tariffs are based on the country where an item is manufactured, not the country where the item was shipped. Additional processing fees may be charged by the shipping provider. You may be contacted by a shipper. We've still got you covered on the eBay guarantees. Duty drawbacks or refunds from U.S. Customs. So, based on the cost, you may have to pay. That's what I'm saying. Is this? I'm not sure if this is for people who resell on Amazon or people who buy. Okay, U.S. buyers. They up to date about new tariffs and customs requirement for U.S. imports. So I guess it's for buyers too. But if you're buying something for like $80 or $60 on, and it's made in China, you don't have to worry about tariffs. As a consumer, you would do that. If you're a company, you can't import one item that costs $60. You may need 1,000 of those items, so it doesn't make sense to just get one to save on tariffs. So you may get hit if you're a company. You'll pay tariffs on shipments over $800. Duties on imports. Shipments over 250 may require your 9-digit social security number before delivery. Maybe companies start to charge more for products trying to front. Yeah, companies definitely will charge more, because like if you have a storefront in a shopping center and your rent goes up, say your rent goes up a lot, say you were paying $5,000, now you're paying $8,000 a month. You have to start charging your customers more, even if you don't import anything. Say you're a service business. Say you're a massage. You have a team of people who provide massages to customers. So you don't buy anything. You just you pay for the labor, and then you charge per massage. But if your landlord charges you more for rent, then you have to get that money from somewhere, and it's probably going to be charging your customers more. So anytime expenses go up, doesn't matter if it's tariff or whatever it is, you're probably going to pass it on to your customers. So indirectly, tariffs will affect everyone. So this is interesting. I guess even before the tariff situation, if you bought a lot of stuff online, say you bought $5,000 worth of product online, you probably can't. They probably flag it, and you have to prove like you're not a business reselling it, because if you are a business reselling it, then you might have to pay certain taxes or duties. But as a consumer, you don't have to pay those additional fees. or Skint. So that's interesting. So I wonder if yeah, eBay or Etsy. I wonder if Etsy's going to start doing well, because Etsy is kind of like is a lot more shielded from tariffs, because Etsy is people make things. It's usually kind of custom made, uh, like jewelry and stuff like that, and they resell it to someone. So it's not really you're going to be it's going to be less businesses buying from Etsy than they would from Amazon or eBay. So Etsy's down, of course. So there's only 5 companies in in the industry PetMed Express is in. Pharmaceutical retailers. So Walgreens Boots Alliance is the biggest, of course, 9 billion market cap. High Tide, the cannabis company, is second. PetMed Express is third, and then these 2 really small companies. So PetMed Express has always seemed to be cash flow positive, and they used to pay a really high dividend. They don't anymore. They don't pay any dividend. Walgreens now pays a really high dividend, 7%. And the reason the dividend's so high is because people think the stock will go down, and the dividend probably will be cut. So there's because if a company offered us a secure 7% dividend, then a lot of people will buy the stock, pushing the stock price higher, and the yield would go down to a normal level, like 5%. So you can see how much it struggled. So from 1990 to 2015, it had a really good run. Walgreens, $96 at its peak. That was 10 years ago. Lots of times stocks have peaked in 21, 22. This peaked in 2015. And it's really come down big time. You could have got it for under $9, a little over $8, $8.24 at the lowest in September. So it could be a good time to buy Walgreens. Same thing with CVS. You could see the yield got hit 10%. I mean, the stock price really came down, so the yield shot way up. And it got real high, and it's not like they raised that dividend a ton. They just grew it every year because they had plenty of cash flow, but then they cut their dividend to be more in line with stock price, and it's still a 7% yield. So if they bring their dividend back to these levels, your yield's going to be, 25%. It's a really profitable business. Well, it was a profitable business. Now, they got squeezed pretty bad. Things are getting expensive. This is a company that will get affected by tariffs. They import a lot of stuff because this is what they do. Walgreens, it's a brick and mortar retailer. So if you buy things from China, whether you import a whole item and resell in the United States, which is what they do, they buy a lot locally too, but a good amount comes from other countries, and then they resell it. So this will definitely get hit with a tariff. Tariffs will hit definitely a company like this. But you can see that revenue, it's not like that revenue is going down. It's just expenses have gotten so high for a number of reasons. Inflation is a big one. Oh, Ali, yeah, the dollar store. Energy not cheap. Yeah, everything's energy. Bills are expensive. It's not just the products you buy. Labor is expensive. You can't pay people $10 an hour anymore. You got to pay them close to 20. So even with the dividend cut, the yield is still 7%. So it looks like it could be a good opportunity. And don't wait. Don't think tariffs. Don't think tariffs that are going to affect them, and then I have to wait for them to see a revenue decline or their profits go down. Because by the time that happens, everything's already priced into the stock, and you missed it. You have to do it before things happen. You can't wait. It's like waiting for a company to become profitable to invest in them. And by that point, you've already missed it by at least a year. A small business, if your friend wants you to invest in his small business, then you can say, I will not invest until you become profitable. Because he doesn't have a million eyes looking at his company. He might have just like 5 people looking at it. But when you're publicly traded, you have a lot of people looking at the stock. But so I was thinking of going through the financials and talking about the line items, like explaining what they mean. Because you'd be surprised how much you could learn just by understanding some of the stuff. Like if I go, what is advertising? Of course, you know what advertising is, but they spent $3 billion of advertising. So it'll be good to understand what they mean by advertising, like what types of advertising they do. And if you want, and the type of detail I'm talking about, it's better if you look at their 10K, their annual report, because that's when they provide all the information. The quarterly reports, because their quarter ends March 31st. So this is just one of their 10 Qs. But right here, there's a section on advertising expenses. So it's good to understand it on a little deeper level, because then you can make sometimes better decisions if you understand it. Like I said about the tariff thing, like if you understand how much of their products are imported from China, if you see, they import 50% from China. I know they don't, but if you were comparing two, say, brick and mortar retailers, one is 50% import from China, one's 10%, then the one that's 10% could be a good value because the other one's going to take a big hit. So advertising expenses decreased 2.8 million. That's the thing I noticed. We're on page 27. Because their sales went down. This is PetMed Express, from 65 million to 53 million. The sales went down, but they actually became more profitable because they really lowered their expenses. Like their sales went down maybe 20%, 65 million to 53 million. So their sales went down 19%. But their marketing went down a lot more than their sales. Marketing went down 48%. So if sales go down 19%, it would be good if marketing went down at least 19%. It'd be even better if marketing went down more, which it did. Because you can see their sales went down, but their operating income went up. Last year they had a loss of $3 million. Now they have a loss of $450,000. So they're almost break even operating, even with a big cut in sales. So they did a good job at lowering expenses. But obviously, you can't lower expenses forever. You can't lower it beyond zero. So lowering expenses is a good short-term strategy. But on a long-term basis, you have to grow expenses, especially marketing. It has to go up, unless you're a staple like Coca-Cola. Even they market a lot too, but when you have operating income, I mean, you probably want a positive here, but even if it's not positive, if you think about it, depreciation and amortization is a non-cash item. So if you strip out this, they actually have positive operating cash flow. Because if you add back 1.5 million, they actually have positive 1 million of operating income. So on a cash basis, they're doing fine. Although they're, let's look at the trailing 9 months. So the trailing 9 months, they actually have positive operating income, positive 4.5 million, with lower revenue. So their operating income improved a lot. But the statement of cash flows, they have negative operating cash flow. They have negative 2.3 million in the trailing 9 months. And the main reason, because the way you calculate operating cash flow, you start with net income 5.37 million, which is right here. You start with net income. And then you add or subtract the non-cash items. So they had a cash outflow of 26 million from accounts payable. So how do you have a cash outflow of 26 million from accounts payable? So when you use accounts payable, like when you buy things on credit, cash goes up because you're getting something without paying for it. You're paying for it in the future. But when you pay accounts payable, then cash goes down. So maybe in like 2024, they used a lot of accounts payable, say 50 million. And in 2025, they pay that accounts payable. So even though they bought on credit in the past, they're paying for it. So that's kind of what happened here. They had a cash outflow of 26 million from accounts payable. Last year, they had a cash inflow of 8 million. But inventory acts the opposite of that, right? So inventory went up. They had a cash inflow of 17 million from inventory. That means they sold 17 million of inventory. Last year, they had a cash outflow of 12 million. So this means they bought inventory. And when you buy inventory, it's probably connected to accounts payable. You're probably buying it on credit. So they kind of like wash each other out, so to speak. What do you mean by tax dodge? Are you talking about this company? If the product's good enough, you don't need to advertise. That is true. The product's good enough, you don't need to advertise. Although in certain industries, you have to stay competitive. So you have to tell people. Maybe at a certain point, you can lower your advertising. Most people don't cut it totally, except white bread. Like they don't advertise white bread. It's just, I remember in grad school talking about that. It's just everybody knows it already. But even if you have a product that's really popular, like Coca-Cola, you still advertise because Pepsi is putting their advertisements in front of people. So in order to stay competitive, it's a big waste of money advertising, but it's kind of like you kind of have to do it. And they'll look at correlations between how much money they spend in advertising. I used to do that when I ran my business. I could show you. I could show you the I kept track of um hmm. I had it for 9.5 years. It's the wrong file. Oh, stuff. The stuff file. So, because you track most people use QuickBooks or accounting program like that, but it's not as flexible. You can't like look at things on, it's just sometimes hard to find information. So I used to just every month. So every month, like keep certain high level information because it was a tutoring center, so I kept track of the number is just a number of months. So how many students, the change in students. So my very first month, I had 6 students enroll. So now I have 6 total students. This is the total. Like the next month, I had 8 new students. That was a student change. How many students came in? How many left? Like this month, -2. 2 students left. So maybe 8 came in and 10 left, for example. And then I would have revenue. I guess you can ignore that. I would have expenses, how much I spent. This is startup. Most of that is startup expenses. It's like 60,000, 70,000 to get the business up and running. Because it was a franchise, so I had to pay 27,500 to Mathnasium, the franchisor. That's a one-time franchise fee. That was the main expense, and then I have to pay first and last month's rent. I have to buy desks. I had to buy. I did a marketing campaign initially. It spent like 10,000. So this is my profit for my first month. So 2,000 of revenue my very first month, 91,000 expenses. So that's my profit. Marketing. So that's how much I spent on marketing, 1,400. Payroll as a percent of revenue, and I kept this for how many hours my instructors worked because I wanted to see my revenue per instructor hour. revenue per student hour, and I had and I try to see how many kids per instructor. And that's just a calculation, which is U. What is U? Oh, it's the number of hours students spent at the center. So all the students for the entire month, some students only spend an hour at the center, some students spend 10 hours at the center. But I think this is a good tool to understand how businesses work. It was really successful. It was my my best investment. I guess I could hide these because it's just a lot of noise. So after 1 month of running my business, I should do this I'll be right back. I just got to use the bathroom. Um, I'll get rid of this. That's a lot of noise as well. Trying to hide it, so it's just okay. So it's pretty straightforward. After 1 month of running my business, I had a profit of negative 89,000, and my cumulative profit is still negative 89,000. I don't know. Okay, so month 1, 2, 3, 4, and 5. This is back in 2012. Here's revenue. So it goes up. It didn't go up much from October to November. Certain months are not as. So after my 5th month, I had negative $126,000 because I was still in the red. So my 5th month revenue 7,000, expenses 13,000. So for the month, I had a loss of 6,000. And you can see how much I spent in marketing. And the 3rd month, I spent $6,300 in marketing. And my profit was negative 11,000. A lot went towards marketing. So, I mean, in this month, so it finally took to this month to actually break even on a month. So this is the first month I actually made money. Revenue of 10,000, expense of 6,000. Expenses were pretty low that month in January. So I had a profit of $3,000 for that month. So my cumulative profit went from negative 126,000 to negative 123,000. So my margin for the month was 32%. But then back to negative. The following month, revenue went down from 10,000 to 9,000, and expenses went up dramatically. 19,000. There's certain one-time expenses I had to pay. So it kind of took, I always said it took 9 months to break even on my monthly expenses. I mean, there was a negative here, and I think there was a negative during COVID, but pretty much it was consistently positive starting from month 9. Because month 9, I had 15,000 of revenue, 14,000 of expenses. So I made $751 that month. And then the following month, it really jumped from $750 to almost 9,000. That's just for 1 month. That 1 month, I had revenue of 19,000, expenses of 10,000. I only spent 1,900. Certain months, like what I would advertise, like with the schools, for instance, and like it would be like a one-time fee, like $5,000, and for the whole school year. So I might have paid, like one of these months might be that one big one-time fee, or maybe insurance. I pay for insurance once a year, $2,500. So that's why it could be a little lumpy. So people ask, how long did it take you to break even? I said, well, I always say 9 months to break even on my monthly expenses. Like pretty much this month. On a month-to-month basis, I pretty much broke even. It was this month, and then I say 22 months to break even on my initial investment. So it took 22 months, almost 2 years, to break even, because that's this column, cumulative profit. So like the first month, I had a loss of 90,000, then a loss of 13,000. So at my worst point, I was negative $137,000. So I needed at least $137,000 to sustain the business. I could take on debt, of course. And then it was all, so after 22 months, I finally broke even on my initial investment, $18,000. And then it's just all profit from there. Like you see, 1 month I spent $13,800 in marketing. And I talked to other mathnasiums and they would think I was crazy. Like, how could you spend so much money on marketing? And I'm like, what? I have proof it works. That month alone, I made $40,000 one month of profit. I think my best month, I made $48,000 in profit. And I was the first mathnasium in the country to have revenue of $100,000 in a month. I won a big award at the conference. Well, I won a lot of awards, but that was one of the awards I won. First person to get $100,000 in a month. I still regret selling it. So after 9.5 years, I made 1.7 million. Actually, I had to work for it. It's not like it's free money. So that's $180,000, my annual income for the year. And I sold the business too. Oh, that's wrong. why did I only do it up to 2021? Oh, that's when I sold it. Yeah, that's why. I'm like, the 2021, and then I sold it. So I kind of cleared $2.5 million on this investment. I spent $90,000 to get it up and running, and I did sell it. So I got money on the sale. So I cleared almost 2.5 million. So it worked out. But this is like what companies do. You look at, see right here, has a footnote. I spent $5,900 on direct mail that month. That's why it was over 10,000. This is what companies do. You look at your numbers, and then you decide, is it make sense to do marketing, and what type of marketing? Then COVID came. I had 2 straight months of losses during COVID, which was depressing. And then it did come back. But I mean, after doing something for so many years, you do get a little tired of it. And somebody made me a good offer, so I kind of took them on it. At the time, it seemed like a good idea, but looking back, it probably would have been more fun to do this than to work for somebody else. Anyways, okay. We really got off on a tangent there. Wow. So advertising. So it's kind of good to look at, try to what's behind the numbers. So they give a little more information. Advertising decreased 48%, which is what I got too, 48.2%. So that matches. It decreased 48.2%. So you want to know why it decreased. Decrease was mainly from lower gross media spend and higher proportion of spending funded by third-party partners. We reduced gross advertising costs of acquiring new customer. So it cost them $47 to acquire a new customer. So they do the same thing that I did. They look at how much they spend in advertising. They look at how many new customers, and it's just a calculation. Total spend in advertising over total divided by new customers. And they could tell you how much they spend per new customer. And it went down a lot. It was $47, and in 2023 it was $59. So that's good. It's cheaper than to acquire a new customer. But the problem is, if you look, the number of new customers they added was a lot less than prior years. So then that's not good. The decrease to customer acquisition costs was due to a more efficient marketing spend. The advertising cost of acquiring a new customer may be impacted by the advertising environment. Historically, the advertising environment fluctuates due to supply and demand. Mike, what's up? So what other stocks may be a good value? So I think I don't think an e-commerce company Who is not affected by tariffs? Who is least affected by tariffs? It's hard to, like, who's least affected. I would think a company. Well, obviously, if everything is made in the USA, you're least affected by tariffs because you don't need to buy overpriced Chinese goods anymore. Everybody, I understand everybody's affected by tariffs, but least affected. Technology companies are not as affected because, think about the opposite. Who's most affected by tariffs? It's companies that have to get stuff from China, and who has to get stuff from China? It's manufacturing companies, as we saw, retailers like CVS, because they have to buy stuff and resell it, and if they're buying stuff from China, so manufacturing and retailers, well, and of course wholesalers too. So pretty much, think about it. Companies that sell physical products, most of them are probably affected by the tariffs. Who doesn't sell physical products? Well, obviously, service industries. Companies that provide a service like a tutoring center, or are there any really big service companies that are publicly traded? A payroll processor, that's a good one. They're not too affected by tariffs. They just provide a service. Even if a company like ADP or Paychex, even if they have companies in China that they do payroll processing for, that doesn't affect them with tariffs. Services, people do have to pay tariffs on services, not just products. But when I mean by services, if you're a technology company and you spend $10 billion a year in R&D to come up with new products, if some of your payroll is in China that's doing the R&D, that does get hit with a tariff. But if you're a payroll processor and you have operations in different countries, you don't have to pay tariffs to provide that service. You do have to pay a tariff if you bring a service, whether it's a product or service, whether you buy it from China. A lot of commodities like uranium can't go much lower. That's why Meta is not as affected by tariffs as Apple. Apple is really affected by tariffs because Apple's main product is the iPhone. And they do have a lot of products, but that iPhone is like more than half their business. And a lot of the parts are made in China. I would say Microsoft is in terms of tariffs, Microsoft is better than Apple. Because they do make computers, Microsoft, but they're not relying on computers. They do a lot on physical computers. They make a lot of software too, like Microsoft Excel, and that's not really hit with tariffs. unless like they do have they are paying for people in China to do coding, things like that. That might get hit with a tariff. But payroll processor, that's a good one. I can see that as being a good way to avoid the tariffs. Accenture. What are their main products? It's more of an IT play. So I guess if you need a, I know it's spun off from Arthur Andersen. So the 5 segments are strategy and consulting, technology, operations. Accenture, tariffs. Let's see what they say about it. Like, I think that they shouldn't be too affected by tariffs. Let's see what they say. Okay. Trump unveiled the largest and most sweeping tariff package to date, the 10% on imported goods from all countries, and a tariff of 50% on imports from 57 countries. With these latest developments, the average trade weighted or effective tariff into the US is up to 29%. So the average tariff paid for everything is 29%. Obviously, if you're importing exclusively from China, you're much higher than 29%. But if you import mostly from Canada and Mexico, it's going to be closer to the average. The highest level since the early 1900s and up only 2.4% from 2024. I want to see how they're affected by tariffs. That's what I was hoping they would talk about more. Impact of tariff packages on average tariff rates. It's a lot of a lot of fluff, these articles. They just can't get to the point. So here's a nice visual for tariffs. Canada is high, 19%, and it's pretty low for these countries. Oh, this is the country exposure to US tariffs. Okay, we import a lot from Canada and Mexico, of course, because it's our border. Okay, maybe I search the word Accenture. I don't know if they're going to talk about how they're directly impacted by tariffs. That's what I was hoping they would say, but it's just a whole lot of okay. Okay. Accenture, meanwhile, said its numbers have been hit by a reduction in contracts with the US government. Okay, so the number of contracts with the US government has gone down due to tariffs. So that's indirectly they get hit. They're affected by tariffs because the US government there's less business, I guess, because the retaliatory tariffs. So the decreasing number of contracts I guess that's something I didn't think about, contracts. Accenture is really relying on U.S. contracts because I think a lot of their business is with the government. Um, but I would think a company like where is it? ADP. Uh, ADP tariffs. That would be a good play on tariffs because I think that they're pretty. But we'll find out. ADP job report suggests little tariff impact on private sector hiring. Okay, this is just hiring because they keep track of payrolls. So if if uh if people want information on like um the number of employees that are getting hired versus number of employees that getting laid off, they have that information. They can sell it. But I'm not interested in that. I just want to see how the company is affected by tariffs. I guess if tariffs affect companies in a sense that if you had a company with 20 employees and you import it from China, you may have to lay off people if business is low, which could affect a company like ADP or Paychex. So that's another indirect impact of tariffs. I'm expecting them to impose a tax on using computer online. Most payroll services charge a monthly fee per employee. So they make money. The more employees their customers have, the more money they make. So that could be a way they might get affected. But it's all circular. If certain businesses go under because of tariffs, things like that, they'll eventually be replaced because there's always demand for certain things. It's who's going to supply it. Like for instance, if like if engines, like say ICE engines in regular cars, there's obviously going to be demand for engines for cars from car manufacturers. But if like say 2 or 3 companies go bankrupt that manufacture automobile engines due to tariffs, there will be the current companies that are still in business will take some of that market share, or new companies will open up. Especially if you're a car manufacturer and you see the demand for car engines. Say as a car manufacturer, you were paying $2K per engine, and then you sell it for like $5K. What if the price for an engine went from $2K to $4K? It doubled because there's so many. It's so much more expensive to make, one of the bigger manufacturers went out of business. So if you were making cars, you may pivot into maybe also manufacturing engines because there's so much profit in it. Yeah, that's a good business model, payroll processor. So how do they do in ADP is the biggest one, right? I mean, everything's going down. They've been around a long time, since 1990, and they just pretty much only went up. They peaked at 313 last month. It did get down to 270, but it's not that far off. Just last week it was 300, so it's not even down. It's down like 4%. What's the S&P down, like 13%? Does anybody know off the top of the head what's the S&P down for the year? 584 to 526. Ten percent. So they're doing much better than S&P 500. Like what up Berkshire? What's their 'I know they're doing better than S&P. I'm curious. So slow. It's hard to look. That's 685 or 675. It's hard to even tell on these charts. Okay, 675. Wait, it's up. Oh, it's up. Well, is that possible? It's up or year to date? $675. It's up 13%. I thought it was down. Am I looking at the right thing? It's okay. The market open. 685. Yeah, 12%. I like the old Yahoo. It's so much easier to see. Now it's not as good. $589. Okay. But I did have it right. So S&P, I mean Berkshire is up. I thought I read they were down like 3%. 'They should make. Is there a way to like edit this chart? Strategy is don't quit your day job and keep adding to diversify. Yeah, don't quit your day job. That's we know gold is up a lot. $243 to $307. Let me just okay. So the S&P is down 10% year to date. That's crazy. Am I doing this right? Berkshire is definitely up year to date. Or maybe the chart I was looking at was like month to date. Because I thought 589. Yeah, I guess I'm doing it right. But complain about taxes is like complaining about the weather. The UK BRK skyrocketed up recently. So in January, it was 685. It was 685,000. Was it ever below that? It hit 800,000 in March. So it was never down for the year. I was saying that for a while that get Berkshire. It's a good value because they keep accumulating cash, and when you accumulate cash, you get such a good deal when there's discounts. It's kind of like the house next door. If your neighbor, if say the house is worth $500,000, and your neighbor really needs to get out, and he's willing to take $300,000 because you have cash, he won't take $300,000, and then you could just flip it right away after fees. You get $100,000 profit. It's really beneficial to have a lot of cash, because that's why he did really well after the dot-com crash. He was scooping up all these stocks at a major discount. What's Microsoft is not doing well. That's been going down a lot. So that went from 419 to 370. That's down 33% for the year. No, I messed up. 13%. So it's worse than S&P 500. Let's look at the big stocks. $243 to $196. Well, Apple's down 24%. Nvidia. $138, 101. 37%. Yeah, that's been getting hit pretty hard. Tesla's probably getting crushed. $379, 241. 57%. It's down just for the year. $379. Sheesh. So if you're looking for a discount, Tesla. $599, 501. %20. What am I missing? Amazon. $220, 172. Google. $189 to $151. Am I missing anybody else? Do I have all 7? I think I do, right? Okay, so if you were so the goal is to beat the S&P 500, right? Spiders is down 10%. So Microsoft is actually doing the best. I didn't realize that. They're doing the best year to date. Because at one point, before the tariff thing, like in like February or something, or early March, Microsoft was doing the worst, or one of the worst from the Mag 7. Because you could see it was going down already for the year before tariffs. It did come down to 350, but it came back up. Yeah. Or at Netflix. $886. Yeah, I have that on my wife's account. So I'm glad that's up 9%. So that's like the gold star is Netflix. Obviously, Berkshire gets a gold star also. Gold gets the real gold star because it's up 21%. What about silver? $27 to $30. Wow, it was down. It was pretty. It was low. 27 to 30. It, it gets a silver star, gold. So gold is up 10%. Not as good as Berkshire is beating gold, which is crazy because like 30% of Berkshire is Apple, and Apple's down 24%. That's how strong Berkshire is, even though a lot of the company is Apple, the rest of the company is so strong because that cash is really valuable. That cash in Buffett's hands, it's much more valuable in Buffett's hands than our hands because he knows what to do with that cash. The best thing could do is buy the football rights in the UK. Okay. It's performing the best. Oh yeah, Hertz went up a lot the other day, 44%. CVS? Is that right? CVS is doing well? Yeah, I guess it is. 44 to 67. CVS is up 34% year to in 2025. I think it finally bottomed out where people felt like this is the good time to buy CVS. It came down to the low 40s, but that was at the very end of 2024. I was thinking of buying it too. I guess I was thinking about buying it for like a couple of years now. Who would have known 44 was the point? We kept saying, "Oh my God, 100." Like it went from 100 to like 80, 70, 60. Then it seemed like the 70s it was kind of like plateauing. And I guess that's when there was a buying activity because you could see it went up, then down, then up. So around 70 to 80 seemed like a good point. That was in the beginning of 2024. And then it came down again. And it was pretty much flat in the 50 to 60 range for like 6-7 months. So from May 2024 to November. So what is that? That's 6 months. It was pretty much flat. And I think they had weak earnings, and then it came down to the low 40s. And that was the kind of like the point when people got in. So there was buying activity well before the tariffs. And actually tariffs only helped the stock. It keeps going up. Does anybody know why CVS going up so much? It's up 45% for the year. This article was from February. I want to see a more recent article. Well, let's see what this article says. This is in February, so it was the price is pretty close to its February price. But I want to know, why the tariffs not affect. It's pretty much been flat since February. Tariffs have not affected the stock, which I'm kind of curious why. If anybody knows why tariffs aren't affecting CVS, its shares are up 45% this year. It plummeted last year due to higher than expected medical costs in its insurance unit that hurt bottom line. It just came down so much in 2024. I guess people, some investors seem convinced. Share CVS 45%. So Walgreens is up 3% in the same time frame. Would that be quarterly results? Maybe a sign brighter days are ahead. The company stock plummeted more than 40% in 2024. I guess it was just so low from 2024 that even tariffs didn't affect the stock, which is kind of interesting. Okay. Some stocks are, okay. The top 3 performers are CVS, Philip Morris, Cencora. Up 28%. While these names have rallied for company-specific reasons, they also boast characteristics that help the market's 2024 lead has helped comparatively. Still, the healthcare giant seems to be fixing many of its problems. They replaced their CEO. The company also said it's confident in recovery at Aetna. Assuming CVS can keep the recovery going, it could be well poised to weather further market declines. Philip Morris is doing well. I guess that maybe they do make cigarettes, but maybe they don't spend as much. They don't need as much from China. Sprott uranium looks very good. Our version is yellow cake. Uranium, UEC, which tracks uranium, is down 26% for the year. Okay. Well, it's a long stream. Thanks for joining. Is there anything else, or do you guys like when I do the scratch off tickets? Netflix are big enough to wipe Sky out, the current owners. Silver, gold, GDX are poor proxies for commodities. Sprott, physical royalty. Okay, yeah, I guess I'll sign off. Doesn't look like we have much else going on. Okay, thanks for joining. Happy Easter, and I'll talk to you guys soon.